Passive income investing with Better Call Paul. I am not a financial advisor. This video is for educational and entertainment purposes only and should not be taken as financial, investment, or trading advice. All investments involve risk and you should do your own research or consult with a licensed financial professional before making investment decisions.
Hey everyone, it's Paul here on my channel, Better Call Paul. And today I want to go over all of the positions that I sold out of in 2025. So there's a variety of reasons why I sold out of these positions. And I'm going to go through them one by one and just let you know what was the reason why I sold out of them. Now, some of them are more recent and more familiar in my memory. Some of them, were from back at the beginning of 2025. And, I might not remember exactly why I sold out, but I think I have a pretty good idea for each and every one of them, why I sold out of these funds, stocks, ETFs, REITs, whatever they happen to be. And there's a couple that I will say I probably regret. And it's, the case of, where you play with a bar of soap too much and it gets smaller, so there's some positions I probably should have just left alone and they would have been just fine. But at the time I was trying to move my portfolio in a certain direction and these were kind of like the decisions that I made. So I'm going to go through them one by one and hopefully this will give you guys a bit of an idea how I was streamlining my portfolio in 2025. Although I was adding some new positions, but I was taking it more in a direction of high income, trying to grow my monthly passive income. So we're going to start with the YieldMax ones. If you've watched any of my previous videos in the last month, you know that I have recently been trying to reduce my exposure to single stock ETFs with YieldMax, but I actually started doing this earlier in the year. I think the first one I sold out of was YBIT. And you can see that I ended up selling it at a capital loss of $254. Although I think with the dividends, I may have come close to breaking even. I'm not 100% sure. But you can see that the share price itself was down 66% in the past year. So anyway, so that's why I got rid of that one. And on to number 2 was Phoebe. Even though I really like Meta, the share price never seemed to recover on this one, no matter how well Facebook was doing. So I ended up selling it at a capital loss of $255, and the share price year to date is down 37%. One I sold recently was AMZ. And again, I believe in Amazon. And I didn't really want to sell this one, but the share price was not recovering. I ended up selling it at a loss of $735. Of course, guys, just remember, all of these are capital losses, not including dividends. So the share price is down 33% year to date. NVIDIA is one of the more recent ones I sold out of. You can see I was down $1,446, but the share price was only down 26%. I do hold NVIDIA in other ETFs. So, actually, I probably hold all of these in other ETFs. So I didn't mind getting rid of this one. And again, I'd have to really go through all the distributions to see whether or not I was underwater on these positions. But just capital-wise, you can see the loss, all negative. Coney and Tesla, I still have a few shares left of both. But I plan on selling them when the market reopens after Christmas. I'll probably just capture one more distribution and then I'm going to sell them. You can see they're both down 79%, and both of them I'm down a little over $3,000. All right, number 7 is CLIP, which is the Crane Shares KWEB covered call ETF. If my memory serves me correctly, this covered the Chinese market. And you can see it's down 58% this year. And I was down $616 when I sold it. It was not performing well. The distributions weren't very good. It just seemed to be a drag on my portfolio. So I decided to let it go. The next 3, 8, 9, and 10 are all from Quadvest. and they're all split corps or split shares. You can see that two of them, FTN and FFN, I was actually positive. So $211 for FTN and $190 for FFN. I made a little bit of profit, plus all of the dividends that I collected over the years. And DFN, I was down $478. But with all the dividends, I know I was up a lot. Now, the reason why I sold these ones, and maybe I shouldn't have, because it's been a really good year for them. You can see FTN is up 39%, and DFN is up 18%, almost 19%, and FFN is up 33%. The reason why I did sell out of these is because there are times where they stopped paying the dividend. I think FFN was the worst, DFN maybe second, and FTN, I can't remember if it actually ever stopped paying a dividend, but it's a possibility. So I was trying to move away from any sort of income products that could just completely halt their dividend, not reduce it, but just halt it altogether. So, but like I said, these three have done really well this year. So maybe I sold them a little bit too early, but at the same time, I was able to put the money into other funds like, HHIS, which has also done really well for me. Now, the next two from Harvest, Misty and Coney, the reason why I sold these two was because Harvest came out with leveraged diversions, right? So for Misty, they came out with MSTE, and for Coney, they came out with CNYE. So even though I sold Coney at what seemed to be a big loss of $1,700, I was moving the money, sideways into CNYE, which is basically the same thing, and increasing my monthly income at the same time. The next ones, MSHE, LLHE, METE, and NVHE, I sold these all off because I was able to put the money into HHIS and make more dividends or more income on a monthly basis than these ones were paying. Now, with the exception of MSHE and METE, you can see with LLHE, I actually made a pretty good profit of $796 plus all of the dividends. And NVHE, I made a lot of money, $24.91, and I actually made more money on the shares that I sold in my RBC account. These numbers here are all for my Wealthsimple account. So lastly, I sold off Happy Tea, or HPYT, the Harvest Premium Yield Treasury ETF, for a small capital loss, but I did make money on the distributions. I sold this just because I am streamlining my portfolio, and I was just looking for holdings that, I didn't really have a lot of shares, and I didn't really want to add to it. And I just, if I had to pick one fund that was going to go, this one was it. Okay. PDIV, the Purpose Enhanced Dividend Fund, I only had about 6 shares, and I wasn't going to build this position, so I ended up deciding to sell out of it. Although I don't think there's anything wrong with this fund. I have too many positions, so I'm streamlining is basically it. BTCY, I had it in my non-registered account. I was up. You can see I was up $145. I actually sold it before this negative 24% year-to-date, share price drop. So I got lucky. I didn't sell it at the top, unfortunately. But again, I think I was just trying to take a capital gain at that time and move the money into something like MSTE or CNYE that was paying more at the time. I sold out of number 20, which is Bank from Evolve, Canadian Banks and Lifecos. I really like Bank. This is a fund I would have no problem holding on to. I made $1,300 plus all of the dividends for, a couple of years of collecting. But I really wanted to move the money into Canny, which is also from Evolve. It's more diversified and it has a higher monthly dividend. I also sold out of QQQY from Evolve for a gain of $212 plus the dividends that I earned. And this one kind of escapes me. I'm assuming that another fund provider came out with something new or something I thought was a little bit better at the time. So I ended up selling this one and just taking the profits and moving the money elsewhere. The next two from Global X, USCL and QQCL, I think I ended up selling these to move the money into something like HHIS because it had a higher yield. And even though it's not the same fund, the S&P 500 has 500 stocks, but really, it's top heavy, right? And same with the NASDAQ. But anyways, I am buying these again in my margin account. So I do hold USCL and QQCL in my margin account, but not in what I consider to be my main portfolio anymore. HMMJ, the Global X Marijuana Life Sciences Index. I really should have sold this fund back in like 2021 or whenever it was that it hit $17 or $18 a share. I was up a lot of money, but we all thought marijuana stocks were going to skyrocket. So I held on to it and eventually just decided to cut my losses. And because it was in my non-registered account, I can write off this loss. So number 25 is WDTE from Defiance. It's the S&P 500 Enhanced Options Income ETF. And even though it says I'm down 307, I actually made quite a bit in dividends. And all I did was move the money into Defiance's QQQY. So just to, decrease the number of holdings I have, instead of holding both of them, I put the money into one. MST from Defiance, I was going to call it MSTE. MST from Defiance, I bought it. And afterwards, I realized it was a 2x leverage fund, more suitable for swing trading. So when I was up $31, I just got rid of it. I thought it's not worth holding on to. And as you can see, it ended up dropping 92% in the past year. So I got pretty lucky to sell out when I did. HYLD.U, I was buying this in my tax-free savings account. Obviously, it's a US fund. And I was buying it with dividends, but I decided to sell it to put more money, I think, into Misty, which unfortunately in hindsight probably was not a good idea because as you can see, HYLD is up 8.56% in the past year. And we all know Misty from YieldMax is down, 40, 50, 60%. So the next one that I have in green here, I put it in green because this was the big winner of all my funds. And I probably should have sold this one, but a friend told me about Gossamer Bio Inc. I didn't really know a lot about it, but it was kind of a stock tip from a friend. I bought it. It went up a little bit. I kept it for a while. It kind of went up and down, up and down. I decided just to sell it and put the money into something, that I know more about. And of course, after I sold it, then it skyrocketed and, it's 313% in the past year. This is why I really don't look for, individual stocks or penny stocks because I don't have the patience for them. I usually end up selling them too soon. I did have Maggie for a little while from Roundhill. I think I just maybe wasn't happy with the yield. So I ended up selling it and putting the money. I think I put the money into blocks instead. I think Maggie was my Monday payer, and I decided to go with blocks. So I sold out of Maggie. PLTW from Roundhill. This is a big regret of mine selling this one because I sold it for a profit. Thought I'll put the money into MSTW, and then when MSTW goes back up, I'll sell it, and maybe PLTW will come down a little bit. That kind of swing trading game, but. No, PLTW has been pretty solid. And as we all know, MSTW dropped like a rock with the underlying holding, which is MSTR. So FEPI, the RexFang and Innovation Equity Premium Income ETF, I was down $523. Of course, that's not including dividends. But what I decided to do was sell this position and move all the money into AIPI, which is also from RexFang, but it pays a higher monthly dividend. So I took a chance on selling this one, moving the money into that one, and I'm just holding on to AIPI for now. I think I have 200 shares. So I think at the end of 2024, maybe beginning of 2025, around there, I had started collecting or buying SCHD. And I can't remember if I ended up with 100 shares or 500 shares. maybe 200 shares. But anyways, I was basically putting together a growth portfolio, which you could see below. There was, stocks like TD Bank, Pepsi, the Kroger company, right? So I was buying more of a dividend growth type of adding that to my portfolio, right? As a sort of like a separate growth portfolio. And after a while, I just decided that I didn't want it anymore. I try to sell everything at a profit and move the money into higher yielding funds. And I think at the time, SCHD wasn't really having a very good year. The share price was always below what I paid for it. And so I kind of gave up on it, sold that, and just bought other high income ETFs. TD Bank, this one I made $73, which is peanuts. But what happened was I decided to buy this, and I was trying to do a dividend capture strategy where I would buy it, collect the dividend, sell it. And I bought it when it came down from $109 to $99 a few years ago. But as soon as I bought it for $99, thinking I could get the dividend and sell it, it all of a sudden dropped down, I think, into the 80s. So I was well underwater on this one. And then after the scandal, down in the States, TD Bank went down to, I think, the low 70s. So I ended up buying more shares. And, there were a lot of people who were saying TD Bank would never recover. But I kept buying more shares at that price. Got my average price from $99 down to about 84 or something. And once I was in the green, I decided, it wasn't worth holding for the 5% quarterly dividend. I wanted something, higher yielding like bank from Evolve. So I sold my position. And of course, despite what people said, TD Bank did recover. And I think right now it's sitting around $129 a share. So I definitely gave up some upside on that one. Pepsi, I had a small position, same with Kroger and Visa. So one by one, I was selling them off and just moving the money. I think I was actually moving the money into T-SPY at the time. So I had Brookfield Corp, Alimentation Couche-Tard, Shell, so all these single stocks I got rid of, basically decided I'm going to go pretty much 100% income investing and just get rid of these single stock positions or holdings in my portfolio. I did buy Realty Income. It dipped down to, I think, $50 a share. It was up around 60 or so. I bought it, within a few weeks. It bounced back up again. I ended up selling my few shares for $116 profit. So that was great. I put this one in red because this one was a terrible investment. Innovalis, I don't know if anybody knows INO.UN. It's the Innovalis Real Estate Investment Trust. This REIT had office buildings in Germany and France, maybe some other European countries, was doing fantastic right up until the war when Russia invaded Ukraine. And then also with the high interest rates, the rate hikes in North America hurt this fund a lot. So, it went from being a $9 stock to like a $1 stock. And I tried dollar cost averaging, I had a buck a share. Why not buy some more, bring my price down to $5, $6. And then if it ever recovers, all it has to do is get back to $4 or $5 and I could sell. Well, they cut the distribution a long time ago and never brought it back. It never recovered. And finally, I decided, I got like $950 sitting here doing nothing. So I might as well invest that money and start earning some monthly income as opposed to nothing. And I ended up losing $5,694. So in total, all of the sales that I made, I was negative $11,738. But like I said, keep in mind, most of these 41 positions were paying me a dividend or a distribution. And most of them were paying me a dividend or a distribution. So you'd have to go back and add up all of the monthly income that I made from these positions to find out how much I really was, up or down. And not only that, but, if I made $5,000 worth of dividends, but I put that $5,000 into something like T-SPY, then you have to add up all the dividends that T-SPY paid me and so on, right? So anyways, guys, that's 41 positions that I sold out of in 2025. And I did buy a lot of other positions. So unfortunately, my holdings is still up around, I think, 37. So my goal now for 2026 is to bring that down considerably, right? But I don't want to just do it hastily. I want to be methodical about it. I want to research positions that I'm going to get rid of. I want to make sure that I'm selling the right ones and that in 2026, I'm only building up the winners, right? The focus for 2026 is going to be building my winners and selling my losers. All right, guys. But please don't take this as financial advice. If you own, any of these 40 positions, I'm not going to include Innovalis, but if you own any of the first 40 positions and you're doing well, you're making money, you've got capital appreciation, you've got monthly income, you bought them at the right time, you bought them low, they're high now, whatever. Please don't take this as me telling you that you should sell out of any of these positions, right? This is just what I did. And I'm, as part of my channel, I'm being transparent and trying to, let everybody see what I did do in 2025, what worked, what didn't work, what some of the, the smart moves I made and some of the mistakes that I made, selling some funds and stocks like Goss that are up 331% now. I should have never sold, right? So sometimes it's not just the stocks that you buy that are good or bad. Sometimes it's the ones you sell where you end up losing the most amount of money because you sold them too soon. Anyways, not financial advice. Please don't consider this as me telling you to do anything, okay? I don't want anybody coming back and saying that I made a recommendation and I was wrong, okay? Anyways, guys, until tomorrow, bye for now.